Yeah, so awesome. Yeah, that's right. Yeah, Zoom's got that new warning now, which I think is a good thing for all of us. God knows what's been
Yeah.
recorded without consent in the last 2 years, right? So Andrew, you're in Nashville, is that right? Are you in Nashville, Tennessee? Is that where your headquarters are?
Yeah.
Or yeah?
It's sort of where I'm running Willis Re InsurTech from remotely. Before
Yeah.
moving here, John, we were in New York City, and I moved there in 2018 from London. And I
Okay.
sort of, as the InsurTech space became bigger and bigger in North America, it sort of made sense for my career to sort of move the department over here while still
Yeah.
keeping an eye on Europe and Asia. And then during COVID,
Mhm.
we were given the option to move, and this city made a lot of sense for us. So we moved here, and it's been great actually. I sort of really enjoy living here, and
Yeah.
it's a great place to operate from as well.
Nashville's an interesting location. So, and it's kind of central, like landlocked a little bit.
Yeah,
History, obviously, country music they're
yeah.
known for. Are you a big country music fan, or is that
I
something
am not.
you're acquiring a
No,
taste for?
no, definitely not. If anything, I dislike it more. But it's really
Yeah,
music city. So I mean, any kind of music is quite big here, and I think between here and Austin in Texas, it sort of has most of the sort of recording studios and things like that in the States.
yeah.
But it's actually from an industry perspective, healthcare and education are the two big industries in Nashville. But a number of tech companies are moving here, a number of
Mhm.
small startups are moving here, and I think people are taking advantage of very sort of competitive advantages around being able to set up businesses, access to very well educated people. We're an hour's flight from Chicago, we're an hour's flight from Atlanta. It's a pretty well
Yeah.
located place, and it's an exciting space to be in. But because of COVID, I've obviously not been able to enjoy it quite as much as I would have liked to.
Well, hopefully that's in the midst of changing now. And speaking
Hope so.
of kind of enjoyment, so how long ago did you relocate to Nashville? Because I was going to ask you, just talk about something interesting that you've done in the last 2 years, maybe, or maybe it
So coming
predates
up
that.
for a year. Yeah,
Mhm.
so coming up for a year, we moved here in at the beginning of September, and yeah, I mean it's been pretty full on since moving here, and work has been very full on in that period. So
Yeah.
been a lot of focus on all things InsurTech, but socially. We haven't done too much actually. I mean, we've been pretty cautious about COVID. My girlfriend
Mhm.
works in the ICU, so we're just sort of
Uh,
probably that bit more cautious. And having come in from New York, we're sort of just that much more aware of what's going on.
sure.
Um, but yeah, I mean, I'm hoping the adventures will start again maybe next year, and we look forward to sort of traveling again. And I haven't seen my family for a very long time, and it would be great to see them again. So fingers
Yeah.
crossed, the adventures can begin again soon.
Yeah, and it's one thing to stay connected through means like this, but it's really not the same as being together.
No.
And there's so many people that are far distances from their families, and
Yeah,
that's especially as if you have aging parents, it
yeah,
becomes that much more important to keep
absolutely, absolutely.
the gap of time short as possible between those visits.
Yeah.
So let's talk a little bit about your origin story, Andrew. How did you get into the insurance business? I'm sure there's a story there.
There is, and I'll give you a slightly longer version than
Okay.
perhaps you want. Sorry.
It's all right.
So, yeah, I did all the normal stuff. Tried to get through school as best as I could, and went to university. And I studied Japanese and economics. I'd spent some time as a teenager in Tokyo, so it sort of felt like a good thing to sort of continue. And when I graduated with my bachelor's, the 2008 financial crisis hit, and no one was getting hired. So I had the opportunity to go back and do a master's a year later, similar situation. So I stayed on and did a PhD.
Mhm.
My PhD actually focuses on genocide. So I spent a lot of time
Oh,
in Cambodia, and that was my sort of case study. And then after that time, I joined a friend who had a startup in the agricultural space, shearing alpacas and llamas. And we did that for a long time, and that was a lot of fun. And then I joined another friend who had a startup with a sea cucumber farm in Indonesia. And while doing that, I was contacted by the UN, who wanted to do some work with me around the work I'd done on my PhD. So I started working for a law firm that was focused on the International Tribunal in Cambodia on the genocide that happened in the 70s. And then that sort of project came to an end, and I didn't really know what I wanted to do, to be completely honest. And it wasn't that I was lost, but I think I just felt like I had a lot of options and I wanted to choose the right option. So I had a long conversation with my father, who's in insurance, and he said, this is an industry that you should think about. And I must admit, John, it's not something I'd ever considered really. And but I went along and had an interview with the then CEO of Willis Re, and he sort of, I don't know, made it sound like I might be valuable in the business. And he said, why don't you look at sort of leading some of our research functions as it relates to emerging risks and opportunities for both our business, but also our clients' business. And they're obviously insurers, MGAs, reinsurers. And at that same time, so this was in the sort of middle of 2016, Insurtech was just kind of exploding as a label. But I don't know that there was naturally a sort of very good definition around what it was. And I just latched onto it, and I said, look, this is something that I think makes a lot of sense for us. I think it makes a lot of sense for our clients. If nothing else, we should try and understand what it means for our clients. And the business really sort of evolved from there. So I guess that was my sort of foray into insurance. And it was I don't know, the more time I spend in the industry, the more I realize that no one really plans to come into insurance, but we all kind of managed to make our way here. And I'm glad to be here. I love my job.
That's a fascinating story. And I love that your background had nothing to do with insurance. I had a similar kind of entry into the industry as well. I'll save the story for another time, but it is common across the board. And I love hearing that, because I'm a very optimistic and hopeful person, that there are some non-insurance people that will maybe pick up this podcast, and maybe people that are at that point in their life where they're trying to figure out either a second career or where to go next.
Yeah.
And, there's so many directions you can go in insurance. And,
absolutely.
I always say it's actually like someone I spoke to recently said, insurance is a people business, which I think is very true. The second thing is it's a great place for people who are curious. And as a researcher with a background like yours, we need people like that, and especially in the Insurtech space where, two very different technology and insurance are kind of flirting and trying to find a way to merge together and to coexist and to kind of, help one another. And those are not, it might sound like an easy thing because every other industry has evolved in that way. But insurance is a very old legacy industry, and underwriting risk doesn't always converge with technology as naturally as people might think it would, right? So, I think it's great to have people like you, and I encourage anybody. It doesn't matter what your undergrad was. Don't feel like it's going to go to waste. You're going to find a use for it in insurance. Yeah, 100%.
I couldn't agree more. I can't think of many jobs where I could use my quantitative skills, my qualitative skills, my language skills. I get the opportunity to do some creative writing. I get the opportunity, as you say, to meet very interesting people. There's an opportunity to travel. Let's be frank, it's pretty well remunerated. And it's a business that actually has a very material impact on the day-to-day functioning of the planet, right? So to actually feel like you're a part of something that genuinely does make a difference, I think is very rewarding. And like I said, I can't think of too many jobs where actually I could have all of the things that I care about, or all the skills that I've kind of tried to attain through my life, sort of coalescing around one job. And yet I seem to have found that. So I really echo your sentiment. It's a great opportunity for people.
And there's so much variety. Like if you start out in one part of insurance, you can always switch. Right? There's a lot of places to go in the industry. So great plug for the industry. Now, kind of like, I guess some of the sexy stuff that we're here to talk about. You've got your quarterly newsletter, which kind of like framed the conversation for today. From our standpoint at Insurtech Canada, we focus a lot on profiling founders in Canada, trying to shine a light on the Canadian marketplace as a global participant in the InsurTech, global InsurTech community. But it's important that we plug into other InsurTech communities and also understand what's happening in the global InsurTech marketplace. And, the position that you sit in. So I don't even think we've formally introduced you. So Andrew Johnston is with Willis Re, and you lead the InsurTech practice. Is that or COE for Willis Re? Is that the proper
Yes.
way
So
to
I'm
describe?
sort of, my official title is Global Head of Willis Re Insurtech, and that John really is leading a team of people within Willis Re to make the most of this burgeoning space. And it really begins with us getting to know as many insurtechs as we can across the globe. And that's something that's truly very fantastic about our position, is that we do have a global purview and we have clients from all over the world and we cover every class of business. And we're looking to bring to bear the best-in-class InsurTech businesses really in three ways. The first way is to enhance, enable, enrich what our clients do. So that's really bringing technology into partnerships with our insurance company clients, MGA clients, reinsurance company clients. The second is really to enhance what we do internally. So find technology that kind of helps us improve our core business as a global reinsurance broker. And then the third space is probably the most interesting space, if I'm honest, which is where we are a reinsurance broker for a digital audience. And what I mean by that is supporting companies that self-identify with the label of InsurTech, whom themselves originate risk, who require the services of a reinsurance broker. So we do everything from finding paper to capacity to helping diversify businesses into new markets, entering into new markets. It's a really, really exciting space. And I feel very, very fortunate to be able to lead a great team. And I think that Willis Re has created a nice brand for itself in this space. And that's my sort of day job, really. The quarterly briefing is something that I do as best as I can in my free time, but it's probably what I'm best known for.
Right. Well, that's a great overview of your mandate and where you're focused. I think that is quite unique. There's obviously anybody who's paying attention to the space. There's been a lot of activity around IPOs. Some familiar names. There's more than this, but Hippo, Root, Metro Mile, Lemonade, and we're seeing various trends. What do you make of all of these, IPOs and SPACs and all this activity that's happening within the InsurTech space? Is it all just hype, or what do you have to say?
Is it all just hype? No, it's not. I mean, the short answer is no. It's not all just hype. And I think that for certain businesses to trade publicly is a natural evolution.
Mm-hmm.
I would say that not too many of those businesses have been able to return value to their investors at the price to which they are valued. But that might be something that just takes time, and only time will tell. But I think that we do run the risk of perhaps rushing some of the sort of routes to floating publicly, because you have many different people with many different vested interests and many different success criteria as it relates to supporting these businesses. And I think that you do have the traditional IPO routes, and then you do have the SPAC routes, and they're really quite different, right? And SPACs are generally speaking a bit more conservative because you have quite sort of rigorous due diligence run through you, and you work with mentors, and if you decide in the process that actually it's a bit too early to go public, you can retract, and no one's any the wiser. Whereas the IPO route, as we've seen recently, it's kind of very much you're thrust into the public sphere, and there's an impact of that. But the route to public is definitely not for everyone, and I think we run the risk of it sort of being seen as the apex of success, and it's absolutely not, right? It's a good way for certain businesses to sort of evolve. But I think that to the extent that those businesses that have gone public are sort of diluting the value, or some of them, I should say, are sort of potentially diluting the value of what the long-term impact of technology can have in our industry, we should just be a little bit cautious and realistic about what's actually going on.
Right, right. And you're seeing a lot of these companies, like before I mentioned, Hippo, I think is the most recent, came in, and I think two out of three of those, their stock prices were relatively high, and only one didn't experience a drop in the last year. So it makes me kind of wonder, is this just a symptom of capital looking for investment capital looking for a home, or is it actual true confidence in the potential that exists within the insurtech industry, or maybe it's a combination of both?
Yeah.
I don't know what your perspective is on that, but insurance is the second largest industry next to banking, and so obviously there's some security there for risk averse investors. But how do you see it? When you see trends like that, there seems to be a lot of volatility in the space, I guess is what I'm getting at.
Yeah, and there's definitely more supply than there is demand on capital, and I think
Right.
that the industry is very blessed in that it has access to a lot of capital, and I think that in the last 20 to 30 years, new entrants with the word tech in their names generally get sort of amplified in terms of value. So you kind of put all those things together, and it's perhaps not surprising that we're seeing some fairly large valuations relative to sort of underlying business mechanics. But that's not to say that the long-term position is a very valuable one, to the extent that we can harness technology to improve our industry. But I would say more than anything, we are facing a period of market volatility, and that's
Mhm.
been caused by a number of different factors. COVID is a big one. And generally speaking, newer, more exciting stocks will get hit when the perception is that the market is becoming increasingly volatile. And
Right.
you've got, insurance markets hardening as well, which kind of compresses everything in the middle. And what you'll notice is that if you actually track some of the stock price changes from some of the insurtechs that have gone public, their performance is actually highly correlated, which you could interpret as those individual businesses are just naturally performing the same way. But what I think is more likely that's going on is that the market is actually treating all of those businesses as one animal because they're
Mhm.
sort of part of this catch-all label.
Right.
And that's not great for the industry, but it's natural. It's not unique to insurance at all. But I
Mhm.
think that over time, individual businesses, will probably find their natural home from a valuation perspective, from a stock price perspective. I just hope that everyone's patient because I do
Right.
think that the long term value of technology is huge. But there is a lot of sort of myopic, short term return type mentality that is
Mhm.
arguably driving some accelerated things, let's say, in the industry.
Right, and in some cases, maybe some accelerated failures, because I
Yeah.
think we need to learn from those stars who shone bright and then burnt out very quickly. You
Mhm.
talk a little bit about that in your newsletter. Do you want to expand on some of the ones that have failed, and maybe some of your observations around maybe common trends there?
Yeah, I mean, I sort of feel as though it's part of my job to try and present as whole a picture as I can of what's going on because this is going to sound very arrogant and I don't mean it to sound that way, but I do have this very privileged position that I can see a lot of what's going on. And, the
Right.
big raises and the big valuations and things going public get a lot of attention in the news. But things like business cessation doesn't get much attention in the news because, quite frankly, it's probably less interesting on an individual company basis, but it's also quite hard to track. So
Yeah.
I've sort of sat about trying to track this space. And I'm going to be completely honest, John. I mean, my metrics for tracking it are pretty crude
Mhm.
because businesses very rarely sort of announce, "Yep, we're shutting up shop."
Right.
But I do have some sort of instruments to try and track how many businesses have sort of gone under in the last couple of years, and we're looking at about 450 businesses. At least, I would say, out of a possible 3,000. And this is looking at
Okay.
the space over the last 2 years. But if you think that the term insurtech was probably coined around 2010,
Mhm.
the likelihood is it's a number very north of 450.
Right, right. And despite that, I believe the numbers were there was around a 210% increase in investment capital into the
Yeah.
space. in
Q2 was
Q2
huge.
alone.
Yeah, Q2 was absolutely massive, and to be completely honest, Q3 looks like it's on a similar trajectory. But
so it's not scaring
more money
people.
was.
Yeah.
No, if anything, it's kind of it's lit the fuse, right? It's kind of, I think a lot of people feel like it's now or never. I personally disagree, but there is a drive to try and capitalize on sort of public market bullishness before the market becomes so volatile that people start trading towards sort of more conservative stocks, or at least better known stocks, I should say.
Yeah.
But more money was raised in the first 180 days of this year than any other year in total,
Right.
which says a lot.
Why?
I actually worked out the number earlier today, and I think about $40 million per day was invested in 2021. If you were to break
Wow.
down the number over each individual day.
I wonder what we can learn from use cases like Lyft and Uber, who have been, I think Uber IPO'd in 2019 or 2018.
Yeah.
And they still are not profitable, but
Right.
the top line growth is enormous, and they've gone through their challenges with COVID, but they're in a rebound. And so obviously the investment community has sees the long-term value there, and has the stock price is rebounding. And I wonder if the same level of patience and commitment will be exercised towards some of these IPO'd InsurTech companies, right?
Yeah.
There is a trend, and I don't know if this is just kind of like the lowest common denominator, but I think that one of the stats in your newsletter was 55% of the IPO'd companies were distribution focused. And is that the low hanging fruit, would you say? Or why is that, do you think?
So it's 55% of companies that attracted investment capital, not just businesses that have IPO.
Okay.
That's fine. I think that honestly, it just speaks to the fact that our industry, by its definition, requires objective distribution. And so it may be that it's lower hanging fruit, or it may be that it's just such a critical part of our industry that it's worth focusing on. Or maybe it speaks to the nature of technology, which it is this sort of transcendental, ubiquitous platform that allows people to do many different things in many different places. And to be quite honest, I mean, even the term distribution is sort of open to interpretation in terms of what we mean by that. But it doesn't surprise me at all, honestly. And I think it's going to continue to grow. I think on the Uber and Lyft piece, there are definitely parallels that you can draw. I think cynically, you could say, why did Uber and Lyft look to the industries that they did to try and usurp the status quo? And you could argue it was really around improving product and finding the true cost of that product. And I think what's interesting is that there was this notion, and it may still be proved to be correct, that taxi drivers were charging too much, right? But the fact is they've gone in with a cheaper product and they're not making a profit. So maybe their hypothesis was actually wrong, but you can't argue that the product isn't better. I mean, I use both services and the product is fantastic, and to that extent, I'm grateful for it. But the true cost of the product that's being offered is being offset, or the delta is being offset by raised capital, and that's an unsustainable business model over time. And it will be very interesting to see what ultimately happens to the true price of that product, and whether or not it won't be that dissimilar from what we were paying before.
Well, that's I see a lot of potential parallels with the insurance industry, right? And hopefully, maybe we will learn from. You see politicians, at least in Canada, they attack the auto insurance industry on a regular basis, and it's a cycle. And they'll come up with an arbitrary, decrease by 10-15% that they want to see auto insurance rates drop by, and then the insurance industry comes back with, well, we're not making a profit. Or, I think this year, the cumulative total or combined ratio is around 94%, which people are celebrating about because it was an improvement from 97. And there are a lot of companies that are still recording underwriting losses, despite lower loss ratios due to COVID.
Right.
The point being is that it's a very traditional market. There's a perception that it's overpriced, right? And that the insurance companies are making too much money. There is an opportunity, however, on the service delivery side, I believe. And just like the Uber Lyft experience, I agree with what you said as a consumer. Hands down, there's not even a comparison to any taxi that I've ridden in. That Uber and Lyft is a superior experience, and I feel like I'm in control as the user. But the price sensitivity is a whole other conversation. So it makes me wonder if we'll see that level of disruption. And you could argue the insurance industry is a harder industry higher barriers to entry, harder to disrupt. But taxi industry was regulated too. And I don't know if there's a way around that. You look at embedded insurance, what companies like Tesla are doing, et cetera. There's already those signs of disruption. Google, Amazon are getting into the game. So, there's a lot of similarities there that could lead to some level of disruption in the insurance industry. And some of those people could be proven wrong. It'd be interesting to watch.
It is going to be interesting to watch. And there's something sort of quite perverse about it, John, because you'd think that a better product would actually command a more expensive price, right? And yet they're sort of trying to solve both things at once. Right. But I think where there is a sort of fundamental misunderstanding around all that, specifically, let's take the taxi industry as an example, is that you do still have a very human-centric business, and there is a human cost associated with that. And as businesses become established, those sort of status quo costs will also become part of the equation. And I think you see the same thing in insurance, right? To the extent that you can use technology to remove a human being and offer a better product, I think that you can attack price and product at the same time. I think to the extent that you're improving a better product, but you still rely very much on the human, and technology can't necessarily usurp the human, but might improve the human's ability to deliver. I do think it's very difficult to attack price at the same time. Right. And somewhat strangely, the more technology we put into decision making, or at least sort of decision support, the more important the human being becomes, because it's still about complex risk judgment. It's still about developing relationships. It's still about understanding why certain algorithms and certain raters have come to the conclusions that they have, because you've got to explain that to somebody. And I think that 2 or 3 years ago, people were sort of looking at technology as the product, whereas now I think that they're sort of seeing it as the mechanism to support human beings to doing their jobs better. And these sound like very trite things to say, but we are seeing this being played out, more and more. So I think that there's something in that.
I think it removes a lot of the friction points, and I think that's the biggest piece of potential. The obvious one, to me at least, is not to fully automate and computerize or digitize the end-to-end experience. It's to remove the friction points and really so that humans can insert themselves where there's the most value in the customer journey.
I couldn't agree more. Agree more. And not all insurance is the same, right? I mean, mobile phone insurance is very different from oil rig insurance, right? And so you've got to kind of understand where you can best put technology to work and where you can sort of best support human beings with that technology.
Exactly. So what do you think? This is the fun part where you get your crystal ball out. Do you have any predictions, like based on your view of the world and the global insurtech space? I'm sure you've made enough observations over time over what separates the winners from the losers. Are there any hot trends or hot companies that you would put your money on, or just general predictions that you'd like to put out there just for the heck of it?
Sure. I think more money will be raised. I think that this is a trajectory that we're on for a while. I think more businesses will go public. I think that the businesses that do best over a time period will be those businesses, to my earlier point, that use technology really as a facilitator or a sort of mechanism to achieve, things that through traditional commercial lenses have a success criteria that makes sense, right? And I think less and less people are just trying to sort of sell the technology and say, oh, well, it's AI dependent or it's blockchain based. And honestly, if it doesn't have a material commercial impact, it's almost meaningless. And I think it's taken the industry a while to kind of really feel confident to say that. But I think more and more the winners will be those businesses that have a very sound commercial footing, where the technology is arguably the least interesting thing that they do. Um, I think over a greater period of time, we may actually see the label InsurTech used less and less, because I
Mhm.
think that the business that we're in has become so dependent on technology that it almost becomes irrelevant to have to stipulate that
Right.
it's technologically enabled. But it'll be a brave person that does that first, because there is value associated with having the word tech in your business plan. But I think over time we'll see that as well.
Yeah, it's almost like InsurTech is a bridge, right? Until they become
Yeah,
becomes synonymous with the other, and
absolutely.
it is a very antiquated industry in a lot of ways. But I think there's people that maybe aren't as close to insurance, that there has been some significant technological advancements in the industry, and some markets are much further ahead than others. That actually kind of I noticed some things that stood out to me when I was reading through your quarterly newsletter. Was you had mentioned some markets that are coming onto the scene, like Turkey,
Mm,
Romania,
mm.
Saudi Arabia. Um, so, are you at the point now where you feel like everybody's bought in, and everyone gets that? Okay, this is the direction. And as a Canadian, I'm wondering, like, do you see where would you place Canada in the whole global marketplace? Because I don't think we're getting a lot of attention. I think we lose a lot of talent to the U.S. Don't be afraid to, that you're not going to hurt anybody's feelings here. But I just be curious to see, what are you spotting in some of those emerging markets like Romania, Turkey, and some of the other ones that you had mentioned that have in common. And I'm wondering what Canada can learn from that.
So I would say that firstly, I think that to the extent people are recognizing how powerful technology can be used in the right way in our industry, the world is certainly waking up to it. But I wouldn't say that that's put everyone on a sort of equal playing field. And I'll give my own life as an example, right? Like, I grew up in the UK, and certainly in the personal line space, the insurance industry has been online since the mid 90s, and we've been
Yeah.
buying insurance online very much so. And we don't usually work with agents. And I sort of moved to the States, and I was astounded by the fact that people still use agents, and there's still a sort of distrust, or mistrust, I should say, of buying insurance online.
Mhm.
And that's only very recently been sort of starting to change. I'd say in some of the other geographies that you've mentioned, I don't know that I can go as far to say that the actual domestic insurance markets have fully adopted technology. What we are seeing is there are insurtechs in those markets that are being invested in.
Well
But
said.
the great thing about technology, as you know, is that you could make something in Turkey and use it in the UK. It doesn't have to be used domestically.
Yeah.
But I do think in general we are seeing a greater adoption of technology across the globe. And
Mm.
then I'm not just saying this because you're Canadian, but I would say that Canada is up there actually, producing some fantastic businesses. I mean, Chisel AI come to mind,
Mhm.
Breezer come to mind, Players Health do a lot of fantastic work in Canada. And I would say that the Canadian market, in my experience as a broker, has actually been very receptive to adopting technology. And I used to have a development team in Toronto, and I would say that the local talent coming out of places like Kitchener is second to none. So
Yeah.
it may feel like there's a brain drain, but I would say that the Canadian market is as competitive as anyone. And actually, the frustrations that you find in the US market, you don't typically find in Canada. So, I think that Canada's got a lot to offer the global insurtech space.
Yeah, well, that's well put. And we talk a lot about, and I think the brain drain that does exist is a lot of it is a result of lack of early stage funding in Canada. So it's not because there's a lack of talent, or origination of ideas or innovation. And the funding problem, I think, will solve itself over time as
Mm,
more angels get involved and more companies have the courage to bootstrap or maybe collaborate with insurtech venture funds, et cetera. There's always going to be different ways. Canada is also a good environment for government sponsorship and subsidies,
right.
which we're going to be featuring in another interview to help founders build awareness around the tools that are available to them in
Mm,
this market. So that's something that, kind of shifting over to the microeconomic trends, which you talk a little bit about as well in your report. What would you, because what I'm seeing is we're seeing record breaking like Series C fundraising. Like I think one example that stood out was WeFox from Germany. They raised 650 million Series C. Would you say, is that trend more pronounced in certain parts of the globe than others? Maybe that's kind of a foray into the discussion around the macroeconomic trends and what you're seeing around just fundraising, and what are there certain markets that you're seeing more of that activity in than others?
So sorry, more markets receiving investment capital or domestic investment capital?
Yes. Yeah.
Yeah, I mean, the US obviously is sort of number one in that regard, and you do have a very well established private equity venture capital space here.
Right.
And to your earlier point, in countries like Canada and in the UK, you do need government buy-in, and you probably need some union buy-in as well. But once that happens, the capital, is essentially the same. And to that extent, you may actually have a competitive advantage over places like the US, because you then have the state that's highly incentivized to make certain projects work. I think Germany has been an extremely great market and a great supporter of its local insurtech businesses. And there's some absolutely fantastic German insurtechs. The UK, similar situation. France, similar situation. And then in Asia, China and India are leading the way. But you've got really, really positive, vibrant local investment ecosystems in Thailand, in Malaysia, in Indonesia, in Singapore, in Hong Kong. And I think that the moment that people sort of see the opportunity from a returns perspective, the money will appear. And perhaps one of the things that you can do is sort of put pressure on the Canadian government to sort of set up some of these regulatory funding boxes, and really sort of sell the agenda, because otherwise the investors are always going to come out from outside. But I think there's a huge opportunity in Canada for sure.
Well, I think there needs to be more private-public collaboration. And it's funny you mentioned Germany, because I see that strongly as an outsider looking in from what I've seen. And I believe their main insurtech community is subsidized, if not fully funded, by the government. And in Canada, that is not foreign to that type of structure. And I think considering the size of the industry, the limited number of players, it is time for the government to step in. I think there is a balance, though, because we do have, sometimes when the government oversteps and overreaches, that can stifle innovation. I don't know if you've seen examples of that or not, but we want to let the market be free and let innovation flow freely. And so I think the government needs to maybe create more of the environment to let innovation kind of flow, and so that we can attract more investors into Canada, and just be a player, a global player. I'm glad you mentioned 3 of those examples of insurtechs, and sitting from where you sit. I think it's important that we're able to profile. We have those feathers in our cap. Any closing thoughts for you, Andrew, just around what you're seeing, emerging trends in the second half of the year, now that we're Q2 is closed, we're here in Q3. Any surprises on the horizon? Anything that is alarming? Any trends that you're spotting at this point? Watch for.
I think the thing I would just sort of say, and it's almost sort of an underwhelming statement, really, but it's let's say that there are 3,000 insurtechs in the world, and the last quarter was this sort of seismic quarter. I think there was something like 165 deals done for those 3,000 businesses, and 2/3 of the total money raised in Q2 was in 15 deals. So while the number looks absolutely enormous, I think we should just be very, very conscious of the fact that we're only really talking about the very, very top tip of the iceberg. And there is so much more going on than just that. And so there's a danger of becoming too preoccupied with the investment numbers. But they obviously get a lot of attention because it is interesting and it is indicative of one thing that's going on in the insurtech space.
Right.
But I really do encourage people to sort of do their own research or reach out to us, and we can talk to people about other sorts of businesses that perhaps aren't getting so well profiled because they aren't raising these sort of mega amounts of money. But it doesn't mean that they're not fantastic businesses. And to your point, I mean, there's so many different sort of tracks to investment. In Germany, there is a pretty healthy private investment landscape, but the government certainly helped with a lot of startup loans, and a lot of state banks have got involved. And that doesn't necessarily get captured in the numbers.
Right.
But from our sort of global purview, we can see who's doing what where. And I just encourage people to look beyond the headlines. There's so much more going on, and there's some great nuanced activity going on as well.
Well, and there's something to be said about slow, steady growth. And I actually listened to another speaker recently who was talking about how there's been so much focus on the headlines of raising $10 million, but there's no product market fit, or the proof of concept still isn't there, or the user base hasn't been established, or there's not a strong recurring revenue stream. And I think those are the pieces that sometimes people can lose sight of when you get caught up in the buzz and the fear of missing out, is that it's more important, back to a point that you made in your newsletter, is if it's not driving some sort of result or operational efficiency, then it is just buzz, really. So, user traction, growth, retention, and being able to drive a repeatable result are more important things. And I think that other things come when you can prove those things out. And those are the hallmarks of sustainability.
Absolutely. And the industry survives on deal flow, right? And if deals are better supported by MSXL than by blockchain, then by definition MSXL is more valuable than blockchain, right? Which I realize is a very uncool thing to say, but that's the reality of it, John. I mean, the technology just has to do what it needs to do. The rest is all about business and distribution and people and capital and talent. It's so much more than the technology as a product.
So just some closing thoughts here, because we talked about distribution focus earlier, and there's other areas of the insurance space that are screaming for innovation, like risk, product, and process operational efficiency. And I think those things tend to get a little bit less attention. There's a lot of talk around cyber, and that kind of being the next global threat to watch for. Do you see a trend going in any of those directions now that the distribution, all the venture capitals kind of just gravitated towards all these distribution startups? Do you see it going more towards one direction than the other of those other three pillars that I mentioned?
I mean, I think the future of risk is very important. And cyber is something that we've been talking about as a business now for sort of 6, 7, 8 years. And there's still a real issue around solving for pricing, solving for product, solving for service. And it's undoubtedly a potential enormous threat, not just the industry, but to society in general. And the insurance industry's got a role to play in that, in the same way it's got a role to play in, climate risk and all those types of things. But insurtechs are really sort of broken down into 3 buckets: distribution, B2B vendor, and sort of carrier. And I think that all 3 of those spaces have got a role to play in evolving the product, evolving the pricing, evolving operations to try and make sense of contemporaneous risks that have the ability to move quickly. And cyber is a great example. The actual risk vector of cyber changes almost every day. And it's really about understanding what you're trying to solve for as an industry. are you trying to price worst case scenario, or are you trying to price a product where you can get a company back up on their feet ASAP? Are you looking to support a business so that it can pay ransomware? Are you looking to support a business so that it better understands its security threat profile online? And I think that's something that we actually need to crack first. What is it that we're trying to solve for? But to the extent that technology can lend a hand, I think that we should absolutely be looking at technologies to try and help solve these problems. But the future of risk is something that I think as an industry we should be thinking more about. There's some fairly unfortunate metaphors thrown at the industry about us constantly looking in the rearview mirror of the car. And there's some truth in that, right? And it's partly the nature of risk because you price the loss, right, for future. But to the extent that we can use predictive analytics, we can learn from experience to price for the future. I think we have a great opportunity to really help society by providing products and services that speak to today's issues.
Makes a lot of sense, and it's a more enriched point of view, right? It's not limited to just the rearview mirror. It doesn't have to be either or. And I think when there's a blend of predictive and then historical, I think you probably get the best level of risk assessment possible. And then I think technology does play a part there for sure, but it doesn't replace the human aspect. Just final closing thoughts. Q3, your next briefing. So are you on a quarterly cadence, or am I overcommitting you there?
No. We'll do Q3. I'm certainly committed to finishing this year. So the whole year is focused on the future of insurance. Q1 was the future of product and service. Q2 that just went out was the future of distribution and delivery. And Q3, which feels like a nice plug from what we were just talking about, is the future of risk. And then Q4 will be the future of operations. So it's more of an internally focused briefing. And that'll be out, I'm guessing, at the end of October. It'll probably be. I get, the ability to go through all of the quarter end data at the beginning of October, so it'll be as quickly as I can turn it around.
Well, it's a page turner, so I look forward to seeing it, and hope you'll return for a follow-up discussion at some point. That
would be great.
Yeah, we would love to, and perhaps we can have a pint in our hand next time. Maybe do it in a more casual setting, right? Face to face. Looking forward to doing those again too. So
I'd love that.
Thanks again, Andrew, for coming on today. Really do appreciate your perspective and sharing your insights. I know I learned a lot today, and I hope everybody else did as well. So thank you.
Thanks, John.